We're going to pivot to our cash tag segment, and for that, we're going to bring in Andy Swan, the co-founder of LikeFolio.com. And Andy, thanks as always for joining the show.
Glad to be here. Thank you.
Andy, well, as we said, we're talking Tesla, and you have a couple things that your data is showing here with Tesla, and this is one that everyone's looking at from a risk tolerance, momentum side. What is your guys' data showing?
Well, I think before we get started, we should say from a risk tolerance side, this is an extraordinarily risky stock to be involved with. The data on our side, what we're looking for are how much people are talking about online buying, purchasing, leasing a Tesla vehicle. You can see from our purchase intent mentions chart, which is where we track that data. Tesla basically up and to the right in terms of consumer demand for their cars. This is a long-term view of it, but what you can see is, quarter over quarter, we're seeing growth in purchase intent mentions for this company. And so more and more people are talking about buying these cars. Now, unfortunately for Tesla, they have to have this type of growth just to stay in business because they're losing a considerable amount of money and they need a significant amount of market penetration just to become a viable company. And so you have to balance that when you look at these things. But what we can say from the LikeFolio side of things is that there is significant and growing demand for Tesla automobiles. Now, how that plays out in terms of how many Elon Musk's factories are able to push out and how the pricing works and how their debt load works, we don't have any insight into. But I will say with the stock down at the bottom of a range, extremely beaten up, as you referenced earlier, extremely hated by a large percentage of traders and investors. This is a pretty compelling time to look at Tesla when you start to think about this demand curve ramping up for the company.
All right, Andy, I'm going to ask you to do a little more heavy lifting here. So here's my question to you. I think Tesla is a two-pronged story, right? It's the love and enthusiasm for their cars, and it's the mischievous behavior of their CEO, and how those two interact. Do you guys measure any of that? Is there any breakout of Elon Musk tweets versus happiness or dishappiness with the car tweets?
Yeah. So if you look at just the tweets themselves, a lot of it is centered around their very kind of flamboyant, he's at least divisive in terms of the way people think about him. And I think that that's good because Tesla really, if you think about it, is almost a binary play. Like they are either going to change the automotive industry or they're not. And so we see that manifest itself in the way that people talk about the CEO. The other point, the chart that's on the screen right now is consumer happiness mentions. And the one thing that bothers me here is that the more and more people talk about buying Teslas, actually the less and less happy they are with the company. So everybody's really excited about getting this car. And then once it kind of gets there, there's something to the idea that they've been overpromised in terms of the car's self-driving capability and in terms of the ability for the company to repair their vehicle. Those are two areas where we start to see consumers fall off in terms of happiness. So you don't want to see happiness falling as purchase intent goes up. That's what we're seeing with Tesla, but at least on the consumer demand side, we're able to say it is there and it is growing.
Good stuff, Andy. We're gonna pivot a little bit here and bring in Jenny Horn, TD Ameritrade Network contributor, for a little bit more from social media. Jenny, what are you seeing with Tesla?
Well, Tesla's one of those names that we don't need earnings to have a lot of noise of. I mean, there is so much on Tesla, whether you're positive, negative. I mean, the noise is just ridiculous. Obviously, Ross Gerber is one of the well-known bulls on Twitter today. He's all over the place. But then we're also seeing a lot of comparisons to Audi. I mean, people love to compare Tesla to Audi, which people say they're not really making up good ground. So you see that parallel definitely on social media today. But our first tweet, of course, is from Ross Gerber, who says, "I don't think people are negative enough about Tesla's 3-month report. Estimize estimates that revenue will increase sequentially every quarter after this one. This quarter will see a 50% plus increase in revenue." So Ross Gerber is actually joining us later on MOC around 3:30 Central Time. But what do you make of this tweet? I mean, do you think we could see a 50% growth in revenue this quarter?
Well, I think that goes into kind of what Andy was just showing us on the purchase intent mentions. Andy, this is basically saying, we're going to sell more cars, and it goes right in line with what you're seeing and saying more people are interested in these cars.
Yeah, it's completely in line with what we see in our data. And I think, when you're talking about cars and you talk about purchases that are $50,000 or $100,000 or more, there is a lag time between when people talk about purchasing and when it's recognized as revenue and when they actually get the deal closed on a car like that. So it's a longer term decision. So our data has some lag in it. But I think Ross is on to something here. I think that he's probably right in terms of the growth curve that we're seeing in terms of consumer demand translating to revenue and projecting out. It looks like to us, there's no slowing on that slope.
Yeah, I guess the real question to raise on this one, Jenny, is going to be, is the stock price already valuing all of this revenue growth? Not necessarily is the revenue growth there,
right,
but it'll be remain to be seen as they come out with that earnings. But you have another tweet for us too, right?
I do. Our next tweet is from Pets and Policies, who says, Tesla just offered me $40K for my 2016 Model S, which I bought for $116K, and you claim it does not depreciate. You are providing false and misleading information to your investors. Now, this tweet was in response to Ross Gerber, because like I said, he's really all over the place on social media today. But since Tesla has already announced that they missed their analyst delivery estimates, is this already baked into earnings post-market today?
Gosh, it's a tough question to answer, but I think that we can again tie this to kind of what Andy's showing, and that's showing, that consumer happiness. But as far as, there's a lot of details missing in this tweet, Andy, that I'm hesitant to really even comment on it, because we don't know, what happened with the car between when they purchased it and when they were selling it. But it does kind of seem to go in line with a little bit what you're seeing on that teetering off of the happiness.
Yeah, look, if it's going to make Pets and Politics feel any better, I will offer them $41,000 for their car. Does that, just because somebody makes you a low offer doesn't mean that's what it's worth. And this is the kind of thing you see on Twitter a lot with the Tesla Q cash tag. I don't have any idea if this person actually owns a Tesla. When people use that Tesla Q cash tag, what they're saying is that eventually Tesla is going to bankruptcy. And so you have to take those tweets with a little bit of a grain of salt. What we're seeing is that consumer demand for the vehicles is high and it's growing. Tesla has a whole lot of other problems that they have to deal with, including production and debt concerns. But, from a consumer demand standpoint, pretty good for the company.
Let me put a final thought here. And this is a blanket statement, painting with a broad brush. If you are buying a car as an investment to sell it for a higher price later, you're doing it wrong, just so you know. Little note to all investors there.
Appreciation is a little bit inevitable there.
Maybe you're missing exactly what's happening with cars.
Right.